Roxom TV. I'm your host, Jeremy. We've got another very packed show today because today's story are not just about price action. They are about where the world is heading and where the capital is moving next. So let's get straight into the first story. So the first one is global geopolitics. Is it really forcing America to bend its own rules? Because the Trump administration just gave Russian oil a temporary lifeline. Yes, we are talking about Russian oil. So after years of sanctions pressure right now, well, why is Donald Trump doing this? Well, that's because global energy markets are under serious stress. The Strait of Hormuz situation continues to disrupt supply, oil remains elevated, inflation risk remains very real, and now Washington appears to be choosing market stability over political consistencies. We'll break down what that means for oil, inflation, and risk assets like Bitcoin. Then a major legal battle is brewing at Samsung. More than 47,000 workers are preparing to strike. And this is not just another labor story. This is an AI infrastructure story because Samsung sits at the heart of global semiconductor supply, memory chips, AI servers, cloud infrastructure. And if production gets disrupted, market will care very quickly. Even South Korea's government is also watching very closely. And then we're going to talk about crypto because one of the biggest stories of today is the SEC might be preparing to bring stock markets on chain. This could be huge. So we're talking about blockchain-based fashion stocks, legal trading on regulated platforms, potentially 24/7 hours, 24/7 markets, instant settlement, tokenized securities moving into the mainstream. And this is exactly where TradFi and crypto start overlapping. And if that happens, this could be one of the biggest structural shifts in market infrastructure. Also, if we're staying in crypto, Tether might be preparing a serious move into, once again, South Korea. So, 7 trademark filings, including Tether Gold. Circle is already making moves in the region as well. And we are seeing now is something much bigger. So, stablecoin battle for Asia, maybe is for payments, settlement rails, tokenized assets. The infrastructure race is heating up fast in Asia. Now, for Ethereum holders, we certainly need to talk because the Ethereum Foundation is losing senior talent. Multiple experienced people have left in just a matter of few months. So the big question is this. Is Ethereum going through some healthy decentralization, or are we seeing warning signs of much deeper execution problems, especially with major upgrades ahead? And if that wasn't enough, DeFi hacks are back. So another cross-chain bridge just got hit. So Ferris lost over $11 million. That makes 13 DeFi attacks this month alone. And the most worrying part is like hackers are moving deeper into infrastructure. And of course, that's not good for trust and definitely not good for institutional adoption. Then later in the show, we have a fascinating media story. So, because BuzzFeed, the company that was supposed to kill traditional television, just got bought by a television billionaire. And now the plan is to put BuzzFeed back on TV. Honestly, that story says a lot about media, attention, and advertising dollars, where they are going. So, yes, we have massive macro stories, big crypto regulation, AI supply chain risk, Ethereum drama, stablecoin wars, DeFi security concerns yet again, and also media disruption. So this shows of today definitely connects all the dots because whether it's money or infrastructure, technology or power, the same question just keeps coming back. So who controls the whales of the rails of the future? So without further ado, let's actually get started with the first story of today. Of course, we have to start with geopolitics. So we have to start with Donald Trump. So here we have a major twist happening in the US. So because of years, well, actually 4 years, Washington tried to squeeze Russia's energy revenues. That was a key part of the sanctions strategy. So, which is to cut the oil money, pressure Moscow, limit war funding. But right now, that strategy is bending because of some oil markets are under some serious pressure. And even if we hop onto Brent crude oil right now, it is quite expensive. So it's sitting at $110 per barrel. And of course, White House has to make a move. And this time is a very surprising move, if you ask me. What happened is that the Trump administration has extended a sanction waiver that allows some countries to keep buying Russian oil. This applies to Russian oil already moving by sea. The extensions would last 30 days. And Treasury Secretary Scott Bessent announced the move, saying the goal is quite simple, which is to keep vulnerable countries access to energy and keep stabilized oil markets. Because right now, global energy markets are very stressed. And because the Strait of Hormuz crisis changed everything, a major part of global oil supply has been disrupted. And that, of course, created a serious supply shock. Oil prices, as I was talking about, like of course, a surge. Import-dependent countries starting to feel the real pressure fast, especially poorer economies that rely heavily on imported fuel. And Washington was getting so many calls. A lot of them countries are basically going to the US and asking some sort of relief that Donald Trump could do. And here's what makes this story important. So, Scott Bessent had previously suggested these waivers would not be renewed again. That was the expectation. The previous waiver expired over the weekend, but right now, the White House changed the course. So, that tells you just how serious the oil market situation has become. And another very contradicting part we have to cover, of course, the US has spent years trying to reduce Russia's energy income because oil revenue kind of helped funds the war in Ukraine. So this creates a very strange contradiction. So on one side, Washington supports Ukraine. On the other side, Washington is temporarily allowing Russian oil flows to continue because the global energy market needs those barrels, and that's real politics. So, this is much bigger than just Russia. It's actually about the entire global economy. So, the White House might be deciding the short term market stability matters more right now. So, that's why, hence, this move and this extension. But if you ask me, this also showcase how messy geopolitics really is. So sanctions sound really simple in theory, but when global energy markets get disrupted, politics somehow can be very flexible. Everything is about money at the end of the day, and when enough supply disappears, even your enemy's oil starts looking very helpful. And that's just a brutal reality in this world. So as for the markets, like this could help ease some short-term oil pressure. Of course, like we are talking about more supply hitting the market and potentially calming the price, at least temporarily. That could matter for inflation expectations as well. And for risk assets watching, maybe watching the macro picture very closely. But politically, this move would definitely raise questions, especially around consistency. And once again, global geopolitics just remind us when oil supply gets so tight, even principles often get negotiable. All right, so let's shift gears, and I do want to focus on the AI story that is developing in South Korea, and more particularly speaking, Samsung, because like Samsung's chip makers are going on strike, and of course, Samsung is one of the biggest player in the AI sector. So it doesn't just affect the Asian market, but also global market as a whole. And this is not just a labor dispute. This could become a global tech story because when one of the world's biggest chip makers face disruption like this, AI supply chains start paying attention and markets already are. So if we take a look at the Samsung stocks, it actually So the past 5 days, it fell 4.5%. So basically after the strike news. So what happened? Here are some context about the strike. So 47,000 Samsung electronics workers are set to begin a strike this Thursday, so meaning tomorrow. This comes after wage negotiation completely broke down. According to reports, the union actually agreed to a mediation proposal, but Samsung rejected it. That's where talks collapsed. The union said Samsung asked for more time, but when no decision came from management, they walked away. So now the strike is moving ahead, moving forward. So what these workers are asking for, basically, at the center of this fight is bonuses. Like workers want a better performance-based payout system. Specifically speaking, so 15% of Samsung's operating profit as bonuses. They also want the current payout cap removed and a clearer, more transparent bonus structure. So Samsung's, what they are replying is that basically, the report suggests management offer something closer to 9% to 10% while keeping the cap. Samsung says the union's demands are excessive, and that giving in could hurt core management principles. So both sides remain far apart right now. Even though the strike is happening, however, there is some good news though. It might not fully shut down production in Samsung because South Korean courts actually stepped in. A court ruled that critical chip production cannot be dangerously disrupted because semiconductor fabs are extremely sensitive. You cannot simply switch them off like some normal ovens. Wafers can be damaged, equipment can be ruined, safety becomes a real issue. So the court ordered essential operations to continue. No blocking factory entrances, no occupation of facilities, and any violation comes with a major fine. And markets, of course, are paying very close attention to Samsung because Samsung, again, is not just another electronics company. It is one of the world's most important semiconductor players, especially in memory chips. And memory chips are very critical for AI. So we're talking about data centers, AI servers, cloud infrastructure, model training. So the AI boom depends heavily on semiconductor supply. So if Samsung gets disrupted, markets notice fast. This story got serious enough that top government officials got involved. So both the president and prime minister reportedly urged both sides to try to come together and find a deal. And here's another important detail. So South Korea has emergency labor power. So if the government somehow believes the strike could seriously hurt the economy, officials can suspend industry action for 30 days, and that is a big lever. So if this escalates badly, the government could step in directly. But can this get any worse, if you ask me? So, because that is the key question. Well, right now, this looks like a limited disruption because the court protections reduce the worst case scenario, but labor tension is clearly very real. So we're talking about 47,000 workers, they're very unhappy. Of course, that is not a small issue. Even if factories stay partially running, efficiency can still suffer. So this just showcase how strategic semiconductor have become. Like a few years ago, this would mostly be a local labor story, but right now it is affecting the entire world. It's becoming the global market story because chips are economic infrastructure. It's also AI infrastructure, national competitiveness infrastructure, and of course that changes everything. But this final take, if you ask me, Samsung might avoid a full shutdown for now, but the strike itself sends a message. So the AI boom depends on a very fragile supply chain. And when labor disputes hit major chip makers, it becomes everyone's problem. Of course, we'll be eyeing very closely here on Roxom TV to see the latest development, especially when we know the strike is happening this Thursday, meaning tomorrow. So do stay tuned for more updates here on Roxom TV. But right now, we are taking a short break, and when we come back, we are diving is very ironic. So do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Welcome back to Roxom TV, and thanks for sticking around with us after the break. We are now diving into a media company. So, specifically speaking, BuzzFeed just got bought by a TV guy, so a television guy. And honestly, there's something almost ironic about this story because if you go back maybe 10 years ago, so BuzzFeed was supposed to destroy traditional TV. It was the future. It was some digital native media, mobile first content, viral videos, some quizzes you can do on your phone. Young audiences kind of glued to phones. The message back then was quite simple that TV is dead. Well, fast forward to today, and now a TV mogul just bought BuzzFeed to put it back on television. So what happened is that we have a billionaire here. So Byron Allen has taken control of BuzzFeed. He bought a 52% controlling stake for around $120 million. That makes him BuzzFeed's the new chairman and also CEO. And his plan is a major media reboot. So not around phones anymore, no social media feeds, but around the living room screen. So what Alan wants, is to turn BuzzFeed into a free TV super app. Think of it like a giant free streaming platform, ad supported, though subscription needed, and packed with content. The idea is to combine BuzzFeed, HuffPost, the weather channel, local news, traffic updates, entertainment, and reportedly around 30,000 movies and TV shows. So this is much bigger than just BuzzFeed articles. This is a media ecosystem play. This news is very interesting, not only because it's ironic, but also because BuzzFeed was once worth $4.5 billion. So, yes, that's a billion with a B. It was one of the biggest digital media success stories. The company everyone pointed to as proof that traditional media was finished, but right now, control changed hands. So, for $120 million, that's a dramatic collapse in value. And honestly, like for this story, it's less about BuzzFeed itself, if you ask me, and more about what it says about media. Because the original bet was phones would replace television, young audiences would never go back, everything becomes short form, everything becomes mobile and very social. But reality turned out to be more complicated, and guess what? People still love big screen. So streaming, of course, changed TV, but it didn't kill the living room. In fact, it kind of made it stronger. So we have Netflix right now, YouTube on smart TVs, Disney Plus, Amazon Prime. People still want to lean back to enjoy some TV shows, those big screen experiences, or passive watching, so playing something in the background. That behavior never disappeared. The divide changed, of course, but the habit stayed. And guess what? So another billionaire, this billionaire, so Byron Allen, clearly understand that he's not just buying BuzzFeed; he's building media scale. He is already active across TV, weather, local news, entertainment. He's even expanding aggressively elsewhere. So this BuzzFeed deal fits a bigger strategy. He has his own content, own distribution, own attention. Very classic media empire building. So again, this story is a reality check for digital media. The phone didn't really replace television. The living room still matters, and the companies that control screens, they might still control where attention and the money ultimately flows. So let's have a discussion in the comment section below if you prefer using your phone to watch some TV program or Netflix, or you still prefer having a big screen in the living room. So do let me know. But anyways, right now let's shift gears to crypto. So here we have some latest regulation coming out. So Wall Street might be coming on chain faster than people realize. So for years, crypto people have said the future is quite simple. So stocks, bonds, real world assets, everything eventually would move on chain. And right now, that feature might be closer than ever because the SEC is reportedly preparing a major shift, one that could legally allow blockchain based stocks to trade on crypto platforms. Of course, that is a big deal. So what just happened is that, according to Bloomberg, the SEC is working on something called an innovation exemption framework. It sounds very boring, I know that, but the idea is actually quite huge. It could allow tokenized versions of stocks to trade legally under a regulated structure, even before the full long term rubric is complete. In simple terms, the SEC might be creating a temporary legal path for blockchain stock trading. So, what does that mean? Is just imagine this: like, imagine owning Apple stock. Instead of only trading during stock market hours, you can now trade 24 hours a day, 7 days a week, instant settlement, and on blockchain rails. No waiting days for settlement, no traditional market friction, and that is deficient for tokenized stocks. And because the groundwork is already happening, so earlier this year, the SEC approved Nasdaq's proposal involving tokenized stock infrastructure that included certain major stocks and ETFs, assets tied to names in the Russell 1000 and major index products. So this isn't some wild crypto fantasy anymore. Real infrastructure is actually being discussed. And speaking of real infrastructure, of course, we now have the SEC commissioner. So Hester Pierce has been one of the clearest voices here. Her view is quite simple. Tokenized stocks are still securities. Existing securities laws still apply, but blockchain technology could modernize how markets work. So we're talking about faster settlement, better efficiency, programmable ownership, lower friction, and that is the opportunity that she sees. Because this could actually be very massive. And for crypto, this is a massive validation. For years, critics said blockchain had no serious use case beyond just some speculation, but tokenized securities, that's a very real institutional use case. And this is where crypto infrastructure starts overlapping with TradFi. And when that happens, the market gets gets much bigger. So that's why I'm a huge fan of RWA as well, and that's why we're talking about that numerous times, whether it's on Genframe Crypto or on Roxom TV. But speaking of tokenized stocks, let's just give a quick shout out to Roxom Exchange because, like, if you guys want to trade tokenized stocks with your BTC, Roxom Exchange is still the ultimate easiest platform for you to do so. So, like, how it works is very simple. We have like a bunch of Bitcoin treasuries. Of course, like MSTL being the number one. You can actually trade the global market. So any stocks right here using your BTC. So you could buy Nvidia using a BTC or Google, Amazon, Apple, basically all the major and most popular stocks that you could actually find. And if you want to trade that with your BTC. Another thing I do want to mention, which is a really hot product right now on Roxom TV, so being STLC. So STLC right now is offering 11.5%. So when you buy STLC, so how it works is that the stock is par at the value of $100 per share. So that's really good, but the yield is constantly adjusting. Why adjusting is basically to attract people to buy more STLC. If it goes too high, of course the yield would go down. So this is how the mechanism works. So right now it's offering a very insane 11.5% APR, so people are very happy. But when you buy STLC on other platforms, you're still earning that yield in USD. While on Roxom, actually everything, we just like to think of the mentality in Bitcoin. Because at the end of the day, you don't want a failing currency like USD. Any fiat currency in this world are meant to lose value over the long term, but BTC is doing the opposite thing. So that's why we always encourage viewers to think everything, not just in USD value, but also in BTC value, because that is the appreciating asset. You don't want some depreciating asset like any fiat currencies in the world, not just the USD. But anyways, this is the gist of it, of Roxom Exchange. Right now, so there are another one that is really hot. So STLC, of course, being the number one. And SATA, so SATA, we covered that a little bit. We have like a standalone segment explaining how SATA works as well. Of course, is coming from Strive, the company. So this one, the whole UI UX is really simple. So you're just swapping BTC. So let's say SATA, that's for Strive. So if you want to swap from your BTC to your SATA, just like one click right now. So it's really easy to use. That is the idea. But like there are a lot of features that are coming to retail users of Roxom Exchange soon. Right now, there are a lot of features only available to OTC desk, but like I could tease out a little bit, like because it's going to be coming out in like a week or 2 weeks for retail. So like one thing that I really like about the how easy to use for on Roxom Exchange is that we have this like Bitcoin lending. So we're basically borrowing the idea of Aave. So you know how Aave, I'm sure a lot of viewers have touched some DeFi or used some lending protocol before. So like on Aave, for example, let's say you're supplying some Ethereum, you can actually borrow some of that Ethereum, like borrow some USD against your Ethereum. So you could put like 50% LTV. So like you borrow, let's say you put $100 worth of Ethereum, you can actually take out $50 or $50 of the loan from the $100 worth of Ethereum. So what you do is that you take that $50 to buy more Ethereum, and then you're basically looping the whole thing. So that is the Aave loop. So what it does here for Roxom TV, again, like this feature is right now available on OTC desk, but like retail, it will come out in a week or two. So like this is like the feature that I really like. So How it works is basically you take the same idea from RFA, you put it to STLC. Because right now, Roxom has also the lending feature. So let's say you have some Bitcoin, so $100 of Bitcoin, you put that as collateral and you take out a loan of some USDT. So you get some USDT and the borrow cost is around like 7.25%, which is the lowest compared to all the lending protocols, whether it's Nexo or Ledin, any protocol out there. So 7.25%, a really low borrow rate. So what you do is that you take out that USDT, that loan against your BTC, and you put that, or maybe you purchase more BTC or you purchase STLC. So that's the case. So for STLC, the carriage rate, so once you take out that loan, you take that USDT, you could buy more STLC, so you looping. In other words speaking, you are earning that difference. So you are earning that 11.5% and you're paying that 7.25% difference. So that is another a really good strategy people use. So that will bring you a 4.25% profit. So very safe profit. So this is called the STLC carry trade. Again, right now, these feature, I know it sounds really good, very attractive. At the moment, it's only available for OTC desk, but we will, for Roxom TV, I believe they will launch out in a week or two. So do stay tuned for retail users if you want to try out these amazing features. Of course, I'll leave all the links of Roxom TV in the description box below. So do stay tuned and do follow Roxom Exchange on X so you know when these amazing features will get launched and available to retail, not just OTC desk. All right, so that's for Roxom, but if we go back to just a quick summary to the whole SEC tokenized stock story. So if the SEC moves forward from here, this could be one of the most important crypto market structure shifts yet. Because this isn't just about meme coin, it's about the future of capital markets and the idea that one day stocks might trade more like crypto than traditional stocks. So yeah, I like the idea. So that's why I'm a huge fan of RWA, as I mentioned. So let's shift. Let's actually goes forward to another stablecoin story of today, and Tether might be making a big move into South Korea. And this story matters a lot for the future of stablecoins in Asia because Tether might be preparing something much bigger than just protecting its brand. It might be preparing to enter one of the most active crypto markets in the world. So what just happened is that Tether has reportedly filed 7 trademark applications in South Korea that includes its company brand, its logos, its product names, and importantly speaking, Tether Gold, also known as XAUT. So now on the surface, this might sound very boring, just like some legal paperwork. Come on, Jeremy. But in business, trademark filings often tell you where the company might be heading next. So, there are a lot of questions. Why South Korea? And even for Roxom TV, we cover South Korea a lot of times as well. Now, that's because South Korea is a huge crypto market. They have really active retail traders, strong exchange volumes, a population already very comfortable with digital finance, and importantly speaking, new crypto regulation is coming to South Korea. South Korea is moving toward much stricter digital asset rules, and foreign stablecoin issuers might soon need local entities if they want market access. That means if Tether wants a serious presence there, they need to start preparing. So this is why analysts are paying attention because Tether didn't just protect one product name; it reportedly registered broader corporate branding too. That suggests this could be bigger than simple legal housekeeping. The speculation is that Tether might be preparing for a formal local presence, maybe even a office in South Korea, or maybe an operating entity, might be a direct expansion strategy. Nothing confirmed yet, but these signals are definitely there. And this is where it gets interesting because one of the filings includes Tether Gold. This is Tether's gold-backed token. Each token is backed by 1 ounce of physical gold stored in Swiss vaults. So this is not just about digital dollars. This could also be about tokenized gold entering Asian markets. And gold matters a lot in Asia. And when I say a lot, that means a lot. Many investors in the region already understand gold better than crypto, so tokenized gold could actually be a smart bridge product, if you ask me. And Tether is not alone. Circle is also making similar moves. So Circle CEO recently visited South Korea, talking with exchanges, talking with financial firms, or potentially exploring partnerships. So what you are seeing now is a stablecoin battle, not just in the US, but also in Asia. And South Korea might become one of the most important key battlegrounds. So this tells us something much bigger. So stablecoins are not just some crypto trading tools, because it used to be. They are becoming financial infrastructure, payment rails, settlement systems, cross-border transfer tools, and now potentially regulated consumer products in major economies. And that is a major mentality shift. And what's interesting here is also Tether's strategy. For years, critics said Tether operated outside traditional regulatory frameworks. But right now, they appear to be adapting, becoming more structured, more strategic, and possibly speaking, more aggressive globally. And that is a big evolution. Final take, Tether filing trademarks in South Korea might look very a small legal story, but it could be the first sign of something much bigger, a serious push into one of Asia's most important crypto markets. And if stablecoins become core financial infrastructure, Asia might be where the biggest battle gets fought. So like this, however, we are taking a short break from here. When we come back, we are getting our, basically diving our toes into crypto. Right now, we have to talk about Ethereum because Ethereum is going through some major leadership crisis. I am still a holder of Ethereum. I used to love Ethereum a lot, but right now, not gonna lie, I'm quite disappointed. Ethereum has survived quite a lot, has been around in different cycles, but a lot of investors, including myself, I do have complaints and also concerned about where Ethereum is possibly going. But we have to take a short break for now. So when we come back, we'll get straight into Ethereum. Do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Welcome back to Roxom TV, and thanks for sticking around with us after the break. We're now going to dive into Ethereum. So Ethereum is going through some leadership crisis, and to be fair, Ethereum has survived a lot. Yet a lot of people have a lot of complaints, I mean, including myself. So Ethereum has seen different bear markets, different competition from all the layer ones, scaling debates, gas fee complaints, layer 2 wars. But now the question is very different. It's not about technology, but rather it's about people. Because Ethereum's core organization is losing senior talent, and that has the community asking this question. Is this healthy restructuring or a warning sign? So what happened is just a few months ago, well, actually just this past few months, multiple senior members have left the Ethereum Foundation. That includes developers, researchers, leadership figures, protocol contributors, like people who helped shape Ethereum's roadmap for years. Some left publicly, some very quietly, some gave personal reasons, others gave very little explanation, but the number is getting attention because this is happening during a major transition period. And Ethereum is already under so much pressure. So if we take a look at ETH price, ETH price performance has disappointed even compared to Bitcoin. So here we are actually pairing with USD, trading at 2100. Like to be fair, it's just previously in the previous cycle, it kind of broke its all-time high. It looks quite pathetic if you ask me. So we waited so since 2021 till 2025. So we waited 4 years for Ethereum to barely break its previous all-time high in the previous cycle. And then right now, yeah, so let's take a look at the how much we dropped. So from its all-time high, we dropped 57% from its all-time high. We waited so long, yet Ethereum is going nowhere. And this is just a USD pairing. And if we go to the Ethereum pairing with BTC, it looks even more painful. So on the daily, this is just a very easy trend line that I connected the dots whenever we found some resistance around this level, and then Ethereum just get rejected and then go to a even lower places. Right now, the pairing is sitting at 0.027 ratio, against BTC. If we zoom all the way out, so right now we're at daily, but what about the weekly? So weekly, again, it just get even more painful. So everything would just ultimately lose value against this BTC pair. So on the weekly, here's another just a very rough trend line I'm drawing. Ever since December 2021, Ethereum has just been underperforming and losing value against BTC. So here we have two trend line. This one we are using a very macro zooming out to weekly or monthly trend line. We haven't broken out of this trend line yet, and even for a smaller or lower time frame trend line, we are still of course on a downslope, and so of course very painful. But here, this is actually the level that I drawn months ago, back in 2025. So 0.026. If Ethereum got low enough, maybe is a start to look very interesting when it comes to the risk and reward level. So I'm still eyeing this chart, but point being, Ethereum has generally speaking very disappointing, especially against this BTC, even against USD has been very disappointing. So competition for Ethereum, it's a very serious talk. Like competition from faster chains remains very intense. Maybe Solana or other layer one options, especially that was a narrative back in 2021. And then for Ethereum, they have the issues when it comes to layer two because it's so fragmented. And to be fair, even till today, like layer two is still a very debatable topics right now. And now core talents are leaving the foundation. That creates concern because Ethereum's protocol roadmap is very complex. You can't easily replace deep protocol knowledge overnight. So, several notable names have stepped away, so leadership changes at the executive level, protocol researchers, core ecosystem coordinators, developers involved in major upgrades. Like some said they wanted rest, some want to focus on new projects, some want to explore AI and Ethereum. But when enough senior people leave at once, markets, of course, is taking notice. And this especially matters to Ethereum because Ethereum's core development is not simple at all. It's not like launching some meme coin. This is infrastructure we're talking about. We're talking about security, consensus, serial knowledge research, network upgrades. If experienced people leave this quickly, execution risk increase. And that is a real concern. This is where it gets very important as well. So like Ethereum's next major upgrade, Glamsterdam, the goal is to increase Ethereum throughput significantly, improve scaling, raise gas capacity, make the network more efficient. But reports suggest timing might already be slipping. Originally expected sooner, now potentially delayed into later 2026. That naturally raises questions. Is the leadership transition affecting execution? And however, like let's just be fair. Like there's another side to the story. Like Ethereum has always talked about decentralization, and that includes governance culture. The Ethereum Foundation itself has signaled something very important. So it does not want to be the permanent center of control. The newer message is basically Ethereum should survive even if key individuals walk away. That's actually philosophically consistent. Like Vitalik has long talked about the walkaway test, meaning if core people disappear, the protocol should still function, and that's real decentralization. But still, crypto moves fast and competitors are very aggressive. Some newer chains reportedly offer much higher compensation, faster execution, less bureaucracy. So Ethereum now faces the same challenge big tech faces. Can Mission and Fission retain top talent when others pay dramatically more? That's the real question Ethereum has to ask. Honestly, like I think this is both challenge and a test. Losing senior people is never ideal, especially during major roadmap execution. But if Ethereum truly wants to be neutral, like neutral infrastructure, it cannot depend on a few star individuals forever. That's the decentralization paradox. Strong leadership helps growth, but over dependence creates fragility. So, like final take, Ethereum might not be in crisis, but it's clearly in transition. The real question is not whether people leave, that happens everywhere. The real question is, can Ethereum keep shipping major upgrades without losing momentum? Because if the answer is yes, that strengthens Ethereum. If the answer is no, the market will, of course, notice fast. And you know where it will reflect fully and instantly? Of course, through price action. That's why we are staring at the TA, at the charts every single day. But like sticking inside the crypto world, we also have a very worrying news coming out from the DeFi world again. So DeFi hacks are back, and the target is now getting worse. For years, crypto users worry about smart contract bugs, bad code, wallet exploits, protocol hacks. But now the attacks are moving deeper into the infrastructure itself. And that's much more dangerous because when infrastructure gets attacked, the blast radius gets much bigger. So here we have another DeFi protocol has been hacked. This time it is a protocol named Ethereum. So Ethereum is basically Ethereum cross-chain bridge was exploited. Estimated loss is around $11.5 million. According to blockchain security firms, the attacker drained Bitcoin-backed assets, ETH, USDC, then quickly convert everything into ETH. So very classic hacker playbook. And so far, no full public explanation yet from the team. And early analysis suggests this might not be a simple smart contract bug. It looks more serious. So potentially a cross-chain verification failure. That means the attacker might have tricked the bridge into believing fake messages were real. Some researchers suspect forged proof validation. Others point to access control weakness. Either way, this is infrastructure level failure, and that is a bigger problem. And here's the most worrying part for the story. So this happened just days after another major attack. Thorchain was also hit recently, and losses there is around 10 million plus. And now we have Virus. That brings the total number of DeFi hacks this month alone to 13 instances. Of course, that's a lot. And it tells you something important. Hackers are getting very active, especially during this AI era. Now, let's spend some time to talk about the bridges, because whenever we talk about DeFi hacks, somehow a bridge is always involved. So here I'm trying to answer the question, why though? Well, that's because bridges are complicated, really complicated. They rely on message passing, they rely on validators, signature system, cross-chain verification, liquidity routing, asset locking, and every major moving part creates new attack surfaces. Single chain DeFi is already risky enough, and cross-chain DeFi even riskier. And this is where crypto's biggest challenge shows up. Innovation has moved fast, maybe too fast. Like everyone wanted more change, more interoperability, faster scaling. But security often becomes the weak point. And breaches have historically been some of crypto's most vulnerable infrastructure. This is not new, but clearly is still not solved. Because many users would just assume decentralization means safe. That's not always true. A protocol can be decentralized in theory and still have weak technical design. If the bridge fails, your funds can still disappear. And that is the harsh truth about DeFi. Honestly, this might force a mindset shift. Crypto spent years prioritizing speed, shipping very fast, launching very quickly, connecting everything. It's more like build first and then we'll fix later mentality. That is just like the entire industry. But infrastructure security now has to become priority number one because trust disappears fast when breaches keep exploding. Yeah, and institutions absolutely will not tolerate this kind of operational risk. This is especially important now because crypto is becoming more institutional. So we have Bitcoin ETFs, stablecoin payments, tokenized stocks, TradFi is of course watching, and stories like this hurt the industry's credibility because if infrastructure keeps failing, big money stays cautious. Final take for the story. So the Furious attack is not just another DeFi exploit. It's part of a bigger warning. The attack surface in crypto is moving deeper into infrastructure. And until cross-chain security becomes strong enough, breaches might remain one of the most dangerous places in DeFi. So my strategy right now, I'm actually not touching DeFi for the moment being because I don't think it's worth picking pennies in front of a train. Like despite there might be some really good farming opportunity, I just still think it's not worth it, especially seeing so much exploits and North Korean becoming so expertise in what they do and stealing money from institutions, big whales, or companies. So or protocols. So that is just what I do. Focusing Bitcoin right now actually makes more sense if you ask my honest opinion. All right, so that's pretty much all I want to cover in today's segment. And before you go, make sure to give us a follow on X. So my X is jamcrypto underscore IO right here. So make sure to follow Roxom TV as well. So we have regular updates coming out on a regular basis, covering different news. We have different hosts of on the show, different guests. So point being, there are so much valuable content here. You probably do not want to miss out, covering global news, AI, Bitcoin, macroeconomy. So make sure to give us a follow on both X and also on YouTube. Thank you guys for watching. I'm here live Monday through Friday starting at 3 a.m. Eastern Time. If you don't manage to catch my shows live, don't worry, the recorded version is also available on both channels. So being Jamjo Crypto YouTube channel and also Roxom TV YouTube channel. Thank you guys for watching. I'll see you guys in tomorrow's show.